Here's a look at where markets ended another busy week with a slew of strong earnings and a mixed bag of economic data. New reports showing a shrinking economy in the first quarter and consumer confidence at a 5-year low. However, inflation is cooling, spending is higher, and we just got another read on the jobs market. It was a blockbuster report showing 177,000 jobs were added to the economy in the month of April, with only 130,000 expected. The unemployment rate holding steady at 4.2%. February and March, however, were revised lower, showing 58,000 fewer jobs added than previously reported. Joining me now is the former chairman and CEO of Home Depot and Chrysler, Bob Nardelli, along with economist Peter St. Onge. Gentlemen, great to have you both. Thank you so much for being here this weekend. And Bob Nardelli, I want to start things off with you with that jobs number that we got on Friday. It was better than expected, and we see the private sector leading the economy. Certainly that's what President Trump has been wanting, private enterprise leading the day versus government jobs.
Yeah, the number could not have come at a better time, Maria. It's just proof positive of what President Trump and this administration is delivering to the people that put him in office. Certainly on the short-term things like the border closing, fentanyl, inflation, and now really repositioning the United States to be a formidable force in a global scale of supply chain and economic growth. So I couldn't have been happier about it. Now, old habits die hard. I keep a close eye on industrial and industry, for example. I think that's going to be a good barometer if we see jobs really start to increase there as a result of onshoring. And we want to keep a close eye on PMI, which is the Purchasing Management Index. Again, a little bit of pullback, probably being conservative till we see what really happens with tariffs. But again, I couldn't be happier for our country.
Well, Bob, you've got lots of investments and are on so many boards. What are you seeing from the companies that you have exposure to in terms of their trends with regard to hiring and growth?
Yeah. So, Maria, a couple of key points. I am seeing some layoffs. It is not attributed to the economy. I think people are taking a lesson from Doge and saying, hey, we better get more efficient. We better get more effective. We have to lean out some of our companies. So I would not be discouraged by some of the things that are happening in companies relative to improving their efficiency. At the same time, you had the number of 4.2%. So that's not a bad number. I hope that Chairman Powell sees this as, again, a very positive report and does the right thing at the June meeting to start to lower the interest rates, which would be another big boost for this administration and keep the economy rolling.
Yeah, for sure. Peter, we did, however, see the GDP contract in the first quarter this week. We saw it down 0.3%. Now, a lot of people saying that was just with companies and businesses getting ahead of tariffs and front-loading things, buying imports. How do you see that contraction in the GDP?
Yeah, I think even Marcus had a hard time figuring it out. The Dow dropped about 2,000 and then immediately started coming back and actually ended the day positive as people figured out what was under the hood. So the headline number was negative, but that was entirely front-running on tariffs, which subtracts from GDP. If you control for that, the underlying economy grew at 4.5%, which is Asia level. Moreover, we had a drop in government spending. That was the first time since 2022. Of course, Joe Biden had been increasing that. And if you control for that, we're close to 5% growth in the economy. Now, what's driving that is an absolute explosion in investment. So it was up 22% on the quarter, which is an epic number itself. Trump has he's been announcing what we're close to 5 trillion in deals at this point. There's whisper of 8 trillion. They haven't all been announced yet. Now, in a normal year, like pre-COVID, the entire economy, 325 million people, managed 4 trillion of investment. Trump has already between doubled and tripled that. And as Bob said just a few minutes ago, that's exactly onshoring. So these are massive investments from either foreign companies moving under the tariff umbrella or even American companies. Apple's talking 500 billion that they're actually going to make things in America for a change. So reindustrialization is happening, I think, a lot faster than markets expected, and it's being driven almost entirely by foreign money.
So do you expect the GDP numbers to be revised upward and show growth?
I think what we are going to see automatically is that huge surge in imports. They're not importing them to sit on them, right? They're importing them to sell them on as either consumer goods or investment goods. So the negative hit, that what it was over 4% hit, that is just going to be paid back in future quarters. But the investment, now that is spending that's going to come in gradually, really over the next year or two. And just building those factories is going to create hundreds of thousands of jobs if we extrapolate from the deals that have already been announced, like Taiwan Semiconductor out in Arizona.
Sure.
So you're talking hundreds of thousands of construction jobs, and then of course the jobs to actually run the plants to bring manufacturing jobs here.
Yeah, that's such great analysis. Bob, real quick before you go, the president had a very successful first 100 days, but it's really about the upcoming 30 days that will be critical now with getting that reconciliation bill across the finish line. What are your expectations there?
Yeah, my expectation is that he will. If you look at members of the administration who have been very supportive, Secretary of Treasury, couldn't be doing a better job of calming the waters, very calm, very direct delivery. I think he'll be behind it. I think Congress is all lined up. Hopefully we'll get the right votes there. But this is critically important. And just one more comment on Peter's is, Marie, what I'm seeing is a lot of investment in high-tech technology, in AI and systems. I'm also seeing private equity is out there putting money to work and really looking at how do we reshore, how do we invest in things to accommodate reshoring and avoid these tariffs, whatever they might be. So I'm really encouraged with the economy, Maria.
Very, very good analysis. We so appreciate you both. Thank you so much, gentlemen. Bob Nardelli and Peter St. Onge. Thank you.